Hello friends, welcome back to part 19 of my Tesla forecast earnings review video series for 2022 Q3. And let's get right back to where we left off. At the end of part 18, we were looking at automotive gross margin percent with and without regulatory credits. So let's move on down to the next section and talk about it. This section is going to be very fast to review, because we saw all of this in part 10 of my video review series. How do I remember that it was part 10 after recording 18 parts? I don't know. It's a mystery how my mind works sometimes. So these are just linking up the page to rows 151, 152. This one's doing a little bit of math, I guess. Row 154, 55, 56, 57, 58. Okay, so those are just linking up to the 150 section of the page. I'll show you what that is. So after we forecast for each model at each site how much we thought the production and deliveries and inventory levels would be, we got to this little section here. It's even formatted the same. I probably just copied and pasted these rows down to have it closer so that it wouldn't be so far away when doing further math. So back we are to this section. I got here pretty quick. I'll try and not make you dizzy by jumping around so much. Let's go back to the one that was math, and it's this one, production efficiency percentage. And luckily, all the cells that are in this formula are right here. So what's this say? It says 1258 times 1259, the two that are above it. Okay, if the maximum weekly production capacity sum is 46,000, and remember this includes stuff like that Fremont Model 3 production capacity of 8,000 vehicles a week, which they cannot do, or however much that number is. That's included in here, so don't freak out over this percentage number being pretty low. Stuff like that knocks off a few points that are totally unachievable at the high end. And then weeks of production, well, I'm going to say that it's the max of 13 because some models at some sites did have 13 weeks of production, others didn't. So both of these are overstated by a little. So I'm taking that in the denominator, the numerator being, okay, how many vehicles did we actually produce? So what this is saying is, all right, we made, in my forecast, 365,954 vehicles during Q3 out of a potential to make 46,000 per week times 13 weeks. So how well did we do? We did 61% of theoretical max capacity. Okay, well, the more important thing with this number is to just compare it to itself from prior and future quarters. 50% in Q2, not great. Those Shanghai lockdowns don't help. So those knocked off 12 points versus where we were in Q1. We did still have some line shutdowns at the beginning of Q3, so that prevented this from doing as well as I believe Q4 will, as more production capacity ramps up at places like Austin and Berlin, and that'll continue to be true going in the next year. And we'll have more and more production efficiency with Tesla being able to utilize more and more of the theoretical design capacity of its factories as those facilities ramp up. So you've got beginning and ending inventories for how many cars were finished and ready to sell at the beginning of the quarter and at the end of the quarter. So I think there will be a little inventory build this quarter. We'll find out if that's right or not when Tesla reports deliveries on, October 2nd, probably. And then delivery subject to lease accounting is just a projection, kind of similar to what it was a year ago this time. All right, so that's that little section. Next, we've got two sections that are very similar here. I mean, three, if I'm being honest. So the point of these sections is to total up for all models at all sites by option, how many dollars are we talking about for each of these kinds of config specs, right? So the math looks really complicated up here when you look at this formula, but I'll just click on this and then I'll drag it up to the top of the page to show you what's going on. It's just saying, hey, for every one of the models that Tesla is going to be selling, here's how many deliveries there are. So this is cell V14. Cell V14 here is being multiplied by V218, which we'll get to pretty rapidly. But the next term after you multiply these by each other is V24 times V233. You're going to see a pattern develop here pretty quickly. Then V34, here's V34, times V248. Now, if we're trying to find the revenue dollars, you can probably guess what the other number is. So let's go find it. So what is on row 218? You can see for every one of these, it's just finding the deliveries for each of the models at each of the sites. And then we come down to the ASP section and we're multiplying by the base config revenue per vehicle. So if the Model S costs $97,096 to buyers who are purchasing it in the base config on average, and that number again will rise to the sticker amount over time as Tesla works through the backlog of orders. Then how many dollars is this? So I'm going to hit enter and it's going to take us right back to where we were at the bottom with this revenue section. So I didn't have to write this formula over and over again because I'm good at using my dollar signs to lock down the deliveries and then not using them on the other ones. So you just drag literally this same formula down the page and it just works. And you can check out the numbers and see, hey, is that my total automotive revenue? $21.3 billion. Let's go back up to the top and check it out. Yes, $21.3 billion. Here it is my total automotive revenue amount. All right, so that checks out. So we have math that adds up, which is a good thing. Okay, so what this is showing you is, okay, where is the $21.3 billion worth of Tesla's revenue coming from in the automotive revenue division? And it's mostly, as you would suspect, coming from the base configuration. It's the minimum amount of money that people are paying on average to get the car before adding any options. And then people are paying money for paint and for performance packages. That's a good chunk of the revenue compared to some of these other categories. A little bit for wheels. I do have a Cyberquad on this line if you're a Cybertruck, because you don't get alternative wheel choices for Cybertruck. Optional interior configs, alternatives. Full self-driving, I have 0.4 billion here. This is probably the most interesting line to watch as time goes forward, because this is just going to fall straight to bottom line earnings. I mean, the fixed costs of full self-driving are covered already regardless how many you sell. So the variable cost of selling one more FSD wireless over-the-air software download to somebody is nothing or close to nothing. So this is the profit lever for Tesla, how they're going to be earning more and more money every year by selling more and more of full self-driving at elevated prices as that software gets better and more useful and more capable, more fully featured, better understood and well known by the public, and more trusted. Okay, so these are the categories that get you to the cash buyer ASP, or how much somebody paying cash for their Tesla is contributing to Tesla in total. So it's 21.095 billion of the 21.3 billion total. You got to make some adjustments after that line. So for the people who are leasing their Tesla, they're not giving you the full sticker price for the car. They're just making 3 years worth of payments that sum to a smaller amount. So you have to back off 965 billion from this cash buyer theoretical revenue here, then people do pay a destination and delivery fee that was not advertised on the website. It's there. I'm sure it's there someplace, but it's not part of your total when you ring it up. Then you have regulatory credits, sales of $356 million. I reviewed that in the previous video if you want to go check that out. Or you probably just did check that out. Other FSD deferral, OTA upgrades, data, this is just whatever else would hit automotive revenue that hasn't already been called out above. And that's how you get to your $21.3 billion worth of total automotive revenue. Then I have a line here that says excluding FSD, leasing, RVG, and regulatory credits. What's this doing? It's just looking at the other rows that aren't the ones that are labeled over here. So if I were to just take these rows and the destination and delivery fee, how much revenue would that be? It would be $21.1 billion in this quarter, if you're interested in such a figure. Next is deliveries excluding subject to lease accounting. So this is saying, hey, the total deliveries were 362 in my forecast for Q3, with 17,000 of those being leasing. Well, if I were to exclude the leased vehicles, then there would be 345,000 almost cash deliveries. Then I have total automotive cost of sales, dollars, and that's coming from down here. What am I doing with that? I'm using it to get to gross margin percent excluding FSD, leasing, and etc. So if I take this number compared to the total automotive cost of sales, what kind of a percentage would it be? And it would be 29.5%, which is somewhere between this number and that number if you like this excluding FSD, leasing, RVG, and regulatory credits number to try to kind of normalize, okay, throw out the weird non-cash buyer stuff and the regulatory credits and the resale value guarantee, and what do you have left? You've got a good gross margin still, 29.5%. And this number is 1280 minus 1278. This is that total automotive revenue excluding regulatory credits figure that we mentioned earlier. Okay, so what's the next section doing? It's doing exactly the same thing. You may recognize the style of this formula. It's again looking at, for each model at each site, how many of them are we expecting to be delivered, and then it's multiplying them by, for each of these option configurations that are available, how much the cost dollars are. And what that gives you is total cost of sales by type. So again, we've got a case where of this $14.9 billion total automotive cost of sales dollars, almost all of that is coming from the base configuration, with some from paint, a real healthy chunk coming from performance package, because you know that's special parts and motors and brakes and whatever that cost more, right? So Tesla makes more money selling a performance package, but it does cost them a decent chunk more compared to the revenue that they're making off that. So this is profitable. You take the performance package dollars, you subtract the performance package expenses, and that's flowing through at a better gross margin than 29.5%, and that's all you want when you try to sell somebody optional extras, is to make your company more profitable every time somebody says yes to taking those optional extras. And wheels don't cost that much, interiors aren't, alternative interiors don't cost that much more than the base interiors do. Then you've got full self-driving, which I do put some cost on, but you can see really by comparing this row against this row, the amount of revenue Tesla's going to be making selling full self-driving is way, way more than the amount of additional cost that comes with selling more FSD to more people. Right. So this is how Tesla's becoming more profitable, and you got a few small adjustments here for the remaining items. And then these are just the cost of sales percentages that go with those. So for every one of these options where I've shown the revenue dollars and the cost of sales dollars, if I look at the ratio of one of those to the other, that gives me the cost of sales percentages by type. So here's what I was just mentioning about these options. You want them to have a favorable cost of sales percentage, a lower cost of sales percentage than your base config has, to encourage people to buy more options that make your company more profitable. And then, yeah, this full self-driving percent, cost of sales percent, starts low and gets lower and lower the more people buy it, until it's embarrassingly tiny. That's within my forecast, anyway. And then just a few more costs down here that get you to your total cost of sales percent. Then I've got the total revenue per delivery here, and what's this doing? It's looking at 1280, which is up here, total automotive revenue, and I'm adding to that the negative number for leased vehicles and other RVG impacts, and dividing that by V1264. That's that total vehicle deliveries number. So just trying to adjust out the leased vehicles impact to get revenue per cash delivery there. Total cost of sales per delivery is probably doing a very similar thing here. Taking out 1294. I'm not sure how useful that is, because there's no cost associated with the leased vehicles. So this is what gives us, well, I don't even know what I use those two rows for, but they're in my model, so we have reviewed them. Revenue per fully diluted share is 1172 over 1200. So 1200 is total shares outstanding diluted, and 1172 is up here. That's my total revenues, including the non-automotive divisions, so energy and services and other. Makes for $6.86 worth of revenue per fully diluted share, which means almost nothing to you until you compare it to what that same figure has been in prior quarters and what it will be in future quarters. So lots of revenue per share growth on its way for Tesla. Then we have a 12 trailing month revenue per diluted share. So if you wanted to annualize the quarterly number, that's what this does for you. So you can see that number growing quite a lot. And then we have GAAP net income minus regulatory credits. So there's row 1278 again, which we've seen a few times. If you just took the GAAP net income and you backed out the regulatory credits, that used to give you a negative number. So if we go back to prior years, where I haven't scrolled much lately, these were big negative numbers in a bunch of quarters. So you can see the sum of 2018 through 2020 was negative 3.7 billion if you threw out the regulatory credits. And then if you throw in 2021, finally it flipped to barely positive $354 million over this 4-year period. But over the first couple of quarters of 2022, it's $4.5 billion already. And I'm forecasting that to rise to 15.2. Wow. GAAP net income minus regulatory credits. Tesla does not rely on regulatory credits anymore to make money. And if I forecast this out into the future, there's 2023, $52 billion total for that 2-year period, $131 billion for the 3-year period, 2022 through 2024. That is a lot of earnings on the way for Tesla, if this forecast is right. Fat chance, it probably won't be right, but it'll be close anyway. And then what did I do with this cell? Well, this says the sum of T1340, well, here's T1340 down here. Oh, so I'm just looking at the total deliveries growth in 2022 versus 2021. This is a figure people like to talk about on Twitter all the time. I don't talk about it all that much, but you're looking at, let me not do that. Let me click in the cell. There it is. So we've got this many deliveries happening in 2022 versus this many that happened in 2021, which shouldn't be formatted as dollars. That should be formatted as a percentage, and really the 147% is just the index. You need to subtract 1 from that to show that it's 47% growth year over year in 2022 versus 2021, which is not that bad. Management guidance was for comfortably more than 50% before the Shanghai lockdowns happened, and if this number had been more in between these two instead of where it actually was, so if there had been another, I'll just plug it in here real quick for you. If there had been another 90,000 deliveries in Q2, then Tesla would have produced comfortably more than 56%, more than 50% growth year over year if it had been 56%. But I'll hit undo on that and return this to the actual value, which included that Shanghai lockdown impact. All right, so that's all I wanted to say in this part of the forecast review series. But if you've enjoyed today's video, click the like button. If you're not subscribed to my channel and you want to hear me talk about Tesla earnings more, you can click the subscribe button. And I will see you in the next one.